Hello there and welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. Today, I want to have a look at precious metals, a quick update on gold. The intermediate cycle on gold has been going on for 91 days. And as the previous cycle was relatively long, it lasted for around 220 days. That's a bit longer than usual. By the way, usual cycles last for around a half a year, so say around 180 days. So as the previous intermediate cycle was slightly longer than usual, we might expect the current intermediate cycle to be shorter than usual. So at 91 days already, if it lasts anywhere for under 180 days, there is a pretty good chance that gold has already shown us the top of this ongoing intermediate cycle. So for that reason, I see a couple of scenarios for gold price going into the next several months. By the way, a few days ago, very close to this recent top, I mentioned to the members at myfinanceteacher.org that some caution is perhaps advised in precious metals. So on more timely updates, make sure to join us. Coming back to our scenarios that I see for gold price. First scenario, which is much more optimistic but perhaps less likely, is a bit of a continuation of this intermediate cycle higher, perhaps a test of this recent new all-time high before it dropped down into the intermediate cycle low, perhaps a bit of a retest of the 200-day moving average. However, as I mentioned, as caution is perhaps already advised in the ongoing intermediate cycle, I would probably only give this scenario anywhere around 35% chance. So the second more bearish scenario here, and which unfortunately is probably more likely, is a continuation down in the ongoing short-term daily cycle. After the end of the ongoing daily cycle, we'll see another pop into the fourth daily cycle of this ongoing intermediate cycle, followed by a more severe decline into an intermediate cycle low. Usually these daily cycles last for anywhere around 1.5 months on average. So perhaps we still have another at least 2 weeks of some downward momentum in this daily cycle before a bit of a rally into another short-term daily cycle, perhaps giving us something looking like the head and shoulders formation if you ignore this wick on the 4th of December. Again, ignoring this wick, looking at the candle bodies, we have seen the recent high in gold slightly surpass the previous early December high, while RSI at the same time gave us a lower high. That's called a negative divergence, and it usually is a sign of upcoming weakness. Hence, this red scenario that probably has close to 65% chance. So with this scenario relatively likely, again, a few days ago, I reduced my allocation to precious metals noticeably, and of course posted all the details in this model portfolio for the members at myfinanceteacher.org. Next, let's have a look at sentiment. And while 2 or 3 weeks ago I mentioned that sentiment was likely to push higher towards the level of 70, it did rally since then. We rallied from mid-50s to mid-60s, but sentiment as well is showing a bit of a lower high over here. Again, a bit of a sign of caution. It's likely that the intermediate cycle might have topped. And while there is still a chance for this sentiment to push one more time higher towards that desired level of 70 before actually topping for this intermediate cycle, one decision you might make is to perhaps decide to re-enter if gold breaks again significantly above the most recent high. That's anywhere around $2,080 per ounce. That's in case if this blue scenario actually works out. But in that case, you probably might want to manage your risk relatively tightly and be ready to take profits very quickly. Moving on to seasonality. Seasonality would actually agree with that less likely blue scenario. We see that seasonality shows that gold generally rallies anywhere from late November or from mid-December all the way into that Chinese New Year, which I've mentioned many times in my previous videos. That's anywhere into mid to late February. Hence, yes, there is still a chance for this blue, more bullish scenario to play out. However, as I mentioned once or twice, in some of my much older videos, I like to rely more on cycles rather than seasonality. Looking at the history of gold price, we have seen quite a few instances where gold price has been declining down into the intermediate cycle low anywhere around January and February, for example at the beginning of 2021. And lastly, let's take a quick look at gold producers. This is GDX in front of you. We see that GDX might be actually leading gold. It has already broke below the middle of the Bollinger Bands and coming close to testing the 50-day moving average. I do expect that perhaps over the next several days this 50-day moving average might actually be broken. So again, as I have already repeated many times, some caution is perhaps advised, and yes, there will be pumps, say into that next short-term daily cycle. Perhaps those would be some additional chances to reduce allocation before a more scary drop into the intermediate cycle low. And of course, that's when we will want to be buying again. That's when the markets will be scared. That's why it's important to look at sentiment. And of course, it's important to trade relying on data rather than on emotions. For the most relevant data on precious metals as well as a range of other assets, look at categories over here. Make sure to join us at myfinancesteacher.org. Join now. For now, I wish you a fantastic Friday and a wonderful weekend. Bye-bye.